6 months ago, I had exactly $0 saved for a down payment. My bank account? Basically a ghost town. My credit wasn't perfect. I wasn't some wealthy investor or tech bro. I was just normal. A regular person making an average income, tired of throwing money away on rent, watching my landlord get richer while I got poorer. Then I discovered something that changed everything. What if I told you that you don't need a massive down payment to buy a house in America? That you don't need to save for 7 years while house prices explode around you? That the government literally has programs designed to get regular people like me into home ownership, and most people have no idea they exist? Here's what blew my mind. There are at least 5 different pathways to homeownership with zero down in 2026. Not 5% down, not 3% down, zero. And I'm going to walk you through exactly how I did it, step by step, so you can do the exact same thing. But here's the real talk, and I'm being 100% honest with you. This isn't some get-rich-quick fantasy. This isn't a loophole or a scam or something too good to be true. It's real, it's legitimate, and it's backed by the US government. But it does require the right knowledge, the right preparation, and avoiding the mistakes that cost me thousands of dollars along the way. In the next 9 minutes, you're going to learn the 5 government programs most people don't know about that let you buy with zero down, the exact credit score range that actually qualifies you, and why that 620 number everyone quotes is totally wrong. The real timeline from I want to buy a house to I have keys, it's shorter than you think. And the sneaky hidden costs that blindside first-time buyers before they cost you money. I'm not here to sugarcoat this. I'm here to give you the truth, the actual real numbers from my closing statement, the rates I got approved for, the costs I faced, and the exact strategy that got me into my first house with zero down payment. So if you're sitting in an apartment somewhere, frustrated, wondering how anyone your age actually owns a home, pay close attention to the next 7 minutes. This could literally change your life. Okay, let's talk about the secret weapons. These are the programs the real estate industry doesn't advertise because they don't make commission on them. But the government is literally giving away money to get regular people into homes. Here's the breakdown. Program number 1, FHA loans. FHA stands for Federal Housing Administration. This is the most accessible program, and honestly, it's where most first-time buyers should start. With an FHA loan, you only need 3.5% down. But here's the catch, and this is crucial. If you qualify for down payment assistance, that 3.5% can be gifted to you. Free money. You don't pay it back. So technically, you're putting down 3.5%, but someone else is paying for it. That's essentially zero down in real terms. The credit score requirement? You can get approved with a 580 credit score. I know people who had scores around 610 and got rates lower than I did. The trade-off, FHA loans come with mortgage insurance. You're paying PMI, private mortgage insurance, on top of your mortgage payment. My PMI was about $180 a month. Not ideal, but it's the price of entry if your credit or savings are tight. Program number 2, VA loans. If you've served in the military, active duty, reserves, National Guard, or are a veteran, VA loans are absolutely incredible. Zero down, zero closing costs, usually zero PMI. And the interest rates? Often lower than conventional loans. A buddy of mine who served 6 years in the Navy got approved for a VA loan at 5.8% while conventional borrowers were sitting at 6.1%. He saved over $100,000 on interest over 30 years just because of the program. The V doesn't lend the money, lenders do. But the VA guarantees it, which means lenders take way less risk, so they give you better rates. If you're military or a vet, this should be your first stop. Seriously. Program number 3, USDA rural loans. Here's the one nobody thinks about. USDA loans. These are for properties in rural areas and smaller towns. Honestly, as cities get more expensive, rural areas are becoming legit attractive. Lower home prices, space, community. USDA loans? Also 0 down. Also no PMI in many cases. The catch is geography. Your property has to be in a USDA designated area. That eliminates most major cities, but it opens up entire regions people overlook. Program number 4 and number 5, down payment assistance and closing cost grants. This is where it gets really interesting. Most states, many cities, and some nonprofits have grant programs that literally give you money for down payments and closing costs. Grants, free money. You don't pay it back. In 2026, these programs are still vastly underfunded because people don't know about them. I got $15,000 in down payment assistance from a state program. $15,000. I had to apply, provide documentation, and wait 6 weeks. But it was free. Some states offer up to $50,000 in assistance for first-time buyers in specific income brackets. That's not a loan. That's a gift from the government. The catch? Restrictions. Some programs require you to stay in the home for 5 to 7 years. Some limit the price of homes you can buy. Some are income restricted. But if you fit the criteria, you're leaving free money on the table if you don't apply. Here's the reality. Most of these programs have application deadlines, funding limits, and are first come first served. The applications take time, but if you start now, you could have free money in hand before spring. That's the programs nobody talks about. Let me destroy a myth right now. You do not need a 750 credit score to get a mortgage in 2026. I'm saying this because I see this myth everywhere, and it stops people from even trying. Here's the truth. The minimum credit score for most loan programs is between 580 and 620. That's it. Now, your credit score does affect your interest rate. That part is true. But let me give you actual numbers so you understand the impact. The credit score impact. A borrower with a 620 credit score might get a 6.5% interest rate. A borrower with a 680 credit score might get a 6.2% interest rate. A borrower with a 740 credit score might get a 5.9% interest rate. A borrower with a 800 credit score might get a 5.7% interest rate. That's roughly a 0.8% difference between 620 and 800. On a $300,000 mortgage, that's about $240 per month difference. Over 30 years, that's roughly $86,000. So yes, your credit score matters, but it's not a deal breaker if you're at 620 versus 650. How to check your score? Go to annualcreditreport.com. That's the official site. Get your free annual reports from all 3 agencies, Equifax, Experian, and TransUnion. Your score might be different on each one. That's normal. If your score is low, if you're sitting at 580 to 600, you have options. First, dispute any errors on your credit report. Literally one error removed could boost your score 20 to 30 points. Second, pay down credit card balances. Your credit utilization, how much of your available credit you're using, is 30% of your score. If you have a $10,000 limit and a $9,000 balance, you're at 90% utilization. Paying that down to $3,000 could boost your score 40 to 50 points overnight. Third, become an authorized user on someone else's account with good payment history. Seriously, this is legal and it works. None of this requires months or years. You could improve your score 50 to 100 points in 30 to 60 days with focused effort. The point? Don't let credit score fear stop you. The threshold is lower than you think, and if you need a boost, it's achievable fast. Okay, so you found a program that fits. Now what? You get pre-approved. Pre-approval is not the same as pre-qualification. A pre-qualification is basically someone asking, how much do you think you can borrow? And then guessing. Pre-approval is actual underwriting where lenders pull your credit, verify your income, and tell you exactly how much you can borrow. Step 1. Gather documents, 1 to 2 days. You'll need 2 months of recent pay stubs, 2 months of bank statements, 2 years of tax returns, proof of employment, letter from employer. If self-employed, profit and loss statements, ID and social security card. Yes, it's annoying, but this is non-negotiable. Lenders need to verify you actually have the income you claim. Step 2. Apply with a lender, same day. Don't just go to your bank. Compare at least 3 lenders, banks, credit unions, and mortgage brokers. Interest rates vary by lender. A difference of 0.3% between lenders is normal. That's $100 plus per month. Use websites like Bankrate, LendingTree, or Rocket Mortgage to compare rates. Get quotes from at least 3 places. When you apply, you'll give basic information: income, debts, assets, employment history, the properties you're interested in. Step 3. Credit check and underwriting, 3 to 5 business days. The lender pulls your credit, verifies your employment, confirms your bank statements. They're checking. Do you actually earn what you said? Do you actually have the savings you claimed? Are there any red flags? This is where things can go sideways. If you opened a new credit card, took on new debt, or made a major purchase during this time, lenders notice. Don't do that. Step 4. Pre-approval letter, 5 to 7 business days. Once approved, you get a letter that says, "We will lend you $X amount at approximately Y interest rate, assuming nothing changes in your financial situation." This letter is gold. It tells sellers you're serious. It tells real estate agents you have financing ready. It's your ticket to actually making offers. The timeline: 1 week to 2 weeks. From application to pre-approval letter, usually 7 to 14 days if you're organized and responsive. I got mine in 10 days. The cost: maybe free to $500. Some lenders charge for the credit check and underwriting. Some don't. Ask up front. Good lenders will clearly state if there's a fee. The approval window, typically 120 days. Once pre-approved, that approval is usually good for 120 days, 4 months. After that, they re-underwrite because your financial situation might have changed. This is the critical part. Once you're pre-approved, your financial behavior has to stay identical. No new debts, no job changes, no new credit cards. Stay boring. Be boring. Boring gets you approved. Here's where first-time buyers get blindsided. Everyone focuses on the down payment. Oh, I need 20% down. That's my barrier. But the down payment isn't even the biggest cost. It's the stuff nobody talks about until you're already committed to buying. Closing costs, $5,000 to $12,000. These are the fees to finalize the loan and complete the purchase. Lender origination fee, $1,200 to $2,500 appraisal, $400 to $600 title insurance, $500 to $1,500 home inspection, $300 to $500 homeowners insurance, $800 to $1,500, 1 year upfront. Property taxes, varies wildly, $1,000 to $3,000 recording fees, $100 to $300. Add those up, $5,000 to $12,000. On my $340,000 house, closing costs were $9,200. Here's the good news. Down payment assistance programs often cover closing costs. Many FHA loans allow sellers to pay closing costs. Yes, that's negotiable. Some lenders have no closing cost programs where they build the fees into your interest rate instead. PMI, $100 to $300 per month. If you put down less than 20%, you're paying PMI. Private mortgage insurance protects the lender if you default. On my $340,000 mortgage with 10% down and a 6.2% interest rate, my PMI was $185 per month. That's $2,220 a year. Over a 30-year loan, that's nearly $67,000. But here's the loophole. Once your equity hits 22%, you can request PMI removal. If you refinance or the home appreciates, that happens faster. Property taxes. the ongoing killer. This one varies insanely by location. In Texas, property taxes might be 1.8% of home value annually. In New York, 1.2%. In New Jersey, 2.5%. On a $350,000 home in New Jersey, that's $8,750 a year. Every year, that's $729 per month on top of your mortgage. Homeowners insurance, $1,000 to $2,000 annually, required by lenders, varies by location, home age, and coverage level. The real monthly cost. Everyone quotes the mortgage payment, but your actual monthly housing cost includes mortgage principal and interest, property taxes, homeowners insurance, HOA fees, if applicable, maintenance, budget 1% of home value annually, utilities. On my $340,000 house, mortgage, $2,040 taxes, $320 insurance, $110 maintenance buffer, $283. Total monthly, $2,753. That's the real number, not just the mortgage, the full cost. Okay, let's talk rates. Because rates are what actually matters for your monthly payment. Where rates stand in 2026, as of early 2026, mortgage rates are sitting in a weird zone. They've come down from the 7% plus rates of 2022 to 2023, but they're not back to the 2.8% rates of 2021. Current market, conventional loans, 5.8% to 6.5%. FHA loans, 6.0% to 6.8%. VA loans, 5.5% to 6.2%. USDA loans, 5.7% to 6.4%. Yes, rates are still higher than the pandemic era. But here's the reality. Homes are cheaper than they were in 2022. So your actual monthly payment might not be that different. How rates affect your payment. On a $300,000 loan, at 5.5%, $1,703 per month. At 6%, $1,799 per month. At 6.5%, $1,896 per month. At 7%, $1,996 per month. That's a $300 per month difference between 5.5% and 7%. Over 30 years, that's $108,000. So rates absolutely matter. The factors that affect your rate. 1. Credit score, 620 versus 750 equals 0.8% difference. 2. Loan type, VA loans typically 0.3 to 0.5% lower. 3. Down payment, 10% down versus 20% down equals 0.2 to 0.3% difference. 4. Loan term, 15-year versus 30-year equals 0.3 to 0.5% difference. 5. Market conditions, Fed policy, economic data. You can't control the market, but you can control your credit score, your down payment, and which loan program you choose. How to lock your rate. When you get pre-approved, you can lock in a rate for a specific period, usually 30, 45, or 60 days. That lock means even if rates rise, you keep that locked rate. Lock it, boys. Rates are too volatile not to. The points question. Lenders offer points, essentially paying up front to buy down your rate. 1 point costs 1% of the loan amount, $3,000 on a $300,000 loan, and typically reduces your rate by 0.25%. Is it worth it? Only if you're staying in the house long enough to break even. If you need $3,000 for closing costs or furnishing the place, skip points. If you're staying 10 plus years and rates are high, buy a point or two. Rate comparison reality. Shop rates with at least 3 lenders. Even 0.1% differences matter when compounded over 30 years. I got quoted 6.3%, 6.15%, and 5.95% from 3 different lenders on the exact same loan. I went with 5.95%. That 0.35% difference is real money. From I want to buy a house to I have the keys typically takes 30 to 45 days. Here's the actual timeline. Days 1 to 7, peer approval. You gather documents, apply with lenders, get pre-approved. You have your letter. Days 8 to 14, house hunting and offer. You find a house you love. You make an offer. Let's say it's accepted. Days 15 to 19, inspection and appraisal. You hire an inspector, $400. The appraisal happens, $500. These happen in parallel, not sequentially. Pro tip, never skip the inspection. I found $8,000 in foundation issues that the inspection caught. We negotiated the seller to repair it. Days 20 to 28, underwriting. The lender does the deep dive. They verify everything again. They order a final title search. They check for liens, encumbrances, anything that would prevent clear ownership. This is the phase where things sometimes break. If you made a major purchase or open new credit, they catch it here. Days 29 to 32, clear to close. Once underwriting approves, you get clear to close. You're 5 days from closing. The title company prepares your closing disclosure, a document showing exactly what you're paying and what terms you're agreeing to. By law, you get this 3 days before closing to review. Days 33 to 37, final walkthrough and closing. You do a final walkthrough of the property. Make sure the seller removed their stuff. House is in agreed condition. Then you go to closing. You sign documents. A lot of documents. I signed 47 pages. It takes 1 to 2 hours. Day 37, funds transfer and keys. You wire your down payment and closing costs. The title company records the deed. The previous owner's lender is paid off. Then you get the keys. Total timeline from pre-approval to keys, 30 to 40 days, usually. But here's the reality. It can stretch to 45 to 60 days if underwriting finds issues, title search reveals problems, inspection finds major problems, appraisal comes in low. The low appraisal thing is real. If the house appraises for less than you agreed to pay, the lender won't lend more than the appraised value. You'd need to renegotiate or walk away. That's why inspection and appraisal happen early, to catch problems before you're emotionally committed. Timeline, 30 to 45 days under normal circumstances. Expect 45 to 60 if anything goes wrong. Build in that buffer. Alright, here's what I wish someone had told me before I started this process. Tip number 1. Start early, even if you're not ready. Begin improving your credit score now. Check your reports. Pay down debt. Don't wait until you're actually ready to buy. Start 6 months earlier. Give yourself buffer time. Tip number 2. Get peer approved before house hunting. Seriously, real estate agents don't take you seriously without it. Sellers don't negotiate with unvetted buyers. Pre-approval takes 2 weeks. Do it first. Tip number 3. Understand your true buying power. Just because a lender approves you for $450,000 doesn't mean buy a $450,000 house. Factor in taxes, insurance, maintenance. Don't stretch to maximum approval. Your house per. Tip number 4. Don't make major purchases before closing. New car, new furniture, new credit cards. Lenders recheck your credit right before closing. New debt can literally kill your approval. Tip number 5. Negotiate closing costs. Sellers often cover them. Make it part of your offer. If there are repair issues, ask the seller to pay for them instead of doing repairs after sale. Tip number 6. Hire a real estate attorney. Some states require them, some don't. Hire one anyway. $500 for a real estate attorney is the cheapest insurance you'll buy. The real truth, buying a house with 0 down isn't a miracle. It's not magic. It's using programs that exist, doing the paperwork, being organized, and following the process. The hard part? Staying disciplined. Not overspending. Not panicking. Not making dumb financial moves during the process. If you can do that, you can buy a house in 2026 with 0 down. Seriously. I went from, how am I ever going to afford a house? To to having keys in my hand in 4 months. You can too. Drop a comment. What's your biggest concern about buying your first house? I'll answer every single one. And if this video helped, hit that subscribe button and ring the notification bell. Next week, I'm breaking down house hacking, how to buy a multi-unit property and rent out the other units to cover your entire mortgage. You don't want to miss that. Thanks for watching. Now go get your house. This video only for education purpose.